In this video, I want to go over how I use hammers and shooting star candlesticks in my trading. I have a very specific way that I look at them, and I have a couple of qualifiers that I use before I pay attention to them. You know, in my primary swing trading strategy, I do not use a lot of candlesticks. These are just a couple of the ones that I do use. There are a few others I may get into at a later time, but right now I want to talk about just the shooting star and the candlestick and how I would identify them. And there's a little bit of an art to it because I will call some one of those two candlesticks if they're closed, as long as they occur at the right spot. And looking at this chart of ADT, I would consider this a shooting star here, as it came up and it came back down. And typically you want the body to finish at the bottom of this wick, which this one does not. But that's kind of what I was saying when I said I have a little bit of leeway in the way that I qualify them depending on where they occur. This would be a shooting star. Like I said, ideally this would have closed at the bottom of the wick. This right here could have been called a hammer. It's not occurring in the right spot to be a hammer, but this is what a hammer would look like. This one occurred during consolidation, so this is not a true hammer. To be a true hammer, it would need to have occurred, one of these down moves to show that it was about to make a move back up. But gives you an idea of what a hammer and a shooting star are. We're going to look at a couple on this video so you can get a good idea of how I actually use them. And looking at the chart of ADT, this shooting star is primarily the one I want to look at. The first thing that I have is the candle, and that candle is going to draw my attention. However, this candle by itself does not mean to me, hey, this is a place to go short. You could have called a shooting star on this up move, but this was, although the entry would have worked at least partially short term, this was not as good of an entry to me. What I like about this shooting star is where it occurs. Yes, I've got a good up move that I can see. I also hit a 52-week high and I have bounced off of it. But more importantly to me is I hit a 3 ATR move here. I'm still above a 2 ATR move here when this candle forms. So this would be a perfect short area based on this shooting star pattern. Let's take a look at one of our other indicators. This is the wave indicator, and we're well above this 2 ATR Keltner channel. Again, when you see the shooting star happen like this with the 52-week high above your channels, whether it be the Bollinger Bands or this Keltner channel here, that is a perfect entry point using the shooting star method. And that's one of the key things that I would look at. Another thing you've got going for you on this shooting star is look at this RSI. I mean, this ADT move was the perfect time to enter with this candle. And, I put a short in right here below this candle. Initially, as I was moving up, and let's look at the other charts, you can see what I was looking at. My initial entry was here. And then this candle went up as far as a short. I didn't get filled. I put a stop order to sell short right here. It didn't get filled on this candle. Went up to here. I moved it up to here. And then once I saw this candle, I put a sell stop right here to get entry. And then I got entry here. Still in it right now. I moved my stop loss all the way down to here. So, just to lock in some profits in case it decides to consolidate or move back up here. Because you do have a pretty strong uptrend right here. So it could, now that it's come back to this 1 ATR, it could start to move back up. My actual target, though, would have been right here at this price action. I took some partial profit here, moved the stop down. I took a third off here, right here at this level, and moved the stop loss down to here. I would take another third probably in this area if it hits here, and then I'll just do a trailing stop till I get stopped out. Because I do think ADT is going to make a move back up. Let's take a look at another one. Okay, I pulled Verizon up now, and what you can see is we have another shooting star right here. And is another good entry point. What you didn't get quite as big of a move, but the things you have to look at are, it came up to a 2 ATR move, you got your shooting star. So this is going to tell you that anything below this would be a good entry. Stop would probably be up in this area somewhere to 3 ATR or possibly the top of this candle if you'll be a little more conservative. Because it looks like we have a downtrend, it consolidated through here. maybe a downtrend forming through here, or at least a bounce between price levels. So I would be fairly comfortable with a stop in this area, but with a target down to probably right here, which is not a lot. And then at least I'll take a third off and then continue to move down off of this shooting star. See how it looked on the other indicator. This is the wave indicator. The entry is not quite as good here. You did not get up to this level, but you did get above the wave. You still got the shooting star. RSI tells you nothing, but with this move and a move back down based on the Bollinger Bands, I think that was still a good entry. Take a look at our moving averages. Yeah, we're seeing the same thing. We got a move above the 50, and then it showed weakness above the 50, and now it's moving back down. So, even on two of the three indicators, on the Bollinger Bands and the moving average, this was a valid shooting star to take a look at as far as going short. On the wave indicator, it's not quite as clear, but again, that's why I use three indicators as I take a look at the different positions. Let's take a look at something else. With the market being up so high right now, I'm having a few little problems finding good hammers to show you. This is a chart of BAC, and I'm going to draw a couple of little circles here so you can see where I'm looking at, since it's not in current price action. You actually had a shooting star right here you could have traded. That's one thing that you see on this chart. You had a move up to 2 ATR, you had the hammer, and you could have went short. The shooting star. Well, let's back up to this hammer here. There's really not much of a solid area here, but I would still classify this as a hammer. What you had is a huge V bottom down. You hit this 3 ATR band and immediately bounced off of it. You're still trading at the 2 ATR. This would have been another entry for me right here to go long with a stop down below this candle. It got a little choppy, but it did work out. But you can see how this was another hammer candle that I would have looked at. But again, the reason this is important isn't because of the candle. What's important about it is because of where the candle occurred. I'm at a move down here, an obvious swing low. I'm at a 3 ATR, 2 ATR move. You come up here, I had broken down below the 1 ATR back toward the mean, and then I was going to continue the trend up. So, that's why these candles are important. Now, this is not a very good hammer because you've got a lot of wick right here. Again, when I tell you about how I use a hammer or a shooting star, I am pretty lenient on the way that I identify those because again, I'm looking at where they occur and what that price action is telling me. So I still would have classified that in my trading. I still would have classified this as a hammer, even though there's quite a bit of wick up here. Take a look at it on the wave chart. Again, here you drop down below the 2 ATR, well below the wave. You got a good chance for a counter trend trade, if nothing else. And that's probably how I would have traded this because you've got a lot of consolidation through here. And I would have looked at this as a move down to probably bounce back down right here, which it actually went up. But, there's no way for me to determine that it was going to do this based on the price action you had back through here. More than likely I would have, had been taking profits. If I'd went long right here, which I actually did not take this trade, but if I went long right here, I would have taken profits probably right in this area, and I would have taken some more profits here, and then I would have had a trailing stop. Trailing stop, my guess would have got stopped at on this candle, but this was another entry candle too, so I would have been fairly, comfortable on the Bollinger Band indicator to go long right here. However, on the wave indicator, you can see I would have been going long over a 2 ATR Keltner, and that's typically not an area I want to go long. In addition, I've still got very high RSI. As I look at this trade right here, I would have had to really think about whether I wanted to go long based on this indicator. You look at it on the Bollinger Band side, it's not, you're still right at this 1 ATR band, so you could argue that you could go long here because it's below 1 ATR. And then on the Keltner, I would have had to, I had to do some soul searching. I can't guarantee you I would have taken this trade if we'd been trading this in real life. Let's look at the moving average, just out of curiosity to see what it looked like. Yeah, well, see, on the moving average, it is a potential entry because we're at that 10 band. So, I may have taken it just because on two of my three indicators it was showing I could go long. This certainly would have been a long for me. I still had for the most part, as far as the 50 day is concerned, yes, it was moving down, but moving average was still above the 50. I was below the 200, which is a little concerning, but again, there's a lot of consolidation here. So, that still could have been a potential long area. And, the biggest thing to take into consideration is I talked to you about how I trade hammers and shooting stars. Again, yes, kind of the look of the candle. Hammer, that's kind of a hammer. This is really not a very good hammer. I would have called it a hammer. This was more of a hammer, but this one was out of the buy zone area. So, I probably would not have taken this one. But this could have been considered a shooting star. I didn't look at that one on the other chart. Let's take a look at that. This actually would have been a potential short for me. I probably would have taken some partial profit at the break of this price action here, and then I would have gotten stopped out. So, but what's important, again, not the candle. It's not the fact that this is a shooting star. It's not the fact that this is a shooting star. What's important is the fact of where it is occurring. It is occurring in areas where I'm already looking to go short. And on the hammers, it's not important that it's a hammer. What's important is that it is a hammer in the area where I'm looking for a long. If I get a hammer like, find a good one here, a hammer or shooting star, like right here. This is a shooting star, but it didn't occur in an up move. So this is not a sell signal to me. Plus, it's right at the mean, which doesn't tell me anything. And if anything, looking at previous price action, I'm looking for a long here. So, this one would have meant absolutely nothing to me because of where it occurred. And that's extremely important, and probably the most important thing I can tell you in the way that I use candlesticks, whether it's a hammer or shooting star or any other one you see me talk about, is yes, I look at it. Yes, it has meaning, but it has to occur at the right spot. And with all of my trading, because I try to trade very high probability setups, everything has to occur at the right spot in order for me to take that trade. If you like this video, please like it. Please subscribe to the channel. Please let me know if you have any other questions. I look forward to hearing from you in the future. Thanks.